Hello people, a very happy evening to all of you. So guys, we started with fundamentals of partnership and let's do a quick recap. So we understood that partnership is basically two or more people, that is minimum two people or more people coming together with the intention to do business and make some profit out of it. And this business can be carried on by all or any of them acting for all. So here the partners like that is the individual owners are called as partners, and partners together are called as firm. And for a firm you have to give a unique name called as firm name. And the liability of a partner is limited, unlimited, and jointly and severally liable. So partners are having unlimited liability and all the partners are having liability jointly and severally. So legal point of view, everything is same, but from accounting point of view, owner is different, firm is different. So essential features we saw: minimum two people, maximum is 50. So this maximum 50 is not given by Indian Partnership Act. It has been given in the Companies Act 2013. So Companies Act 2013 has empowered central government, telling that the maximum limit that you can set is 100. In that, central government has said that as of now the maximum limit is 50. If they want to increase, they can increase, but maximum they can increase is up to 100, not beyond 100. So everyone in India is competent to contract. They can get into contract except two people. People of unsound mind or person of unsound. He's like, sir, you cannot give this answer in exam. What is that technically called as? Unsound mind. A person, who's that? Mentally. Person. Person of unsound mind. And person is disqualified by law. Can a minor be added to the partnership? Yes. If all the partners feel that a minor could be added for the benefit of partnership, yes, very well, you can add. But minor can only share profit. He will not bear losses. That is the condition. Rest all points is fine. Partnership deed ka, okay. Partnership, as long as partnership is concerned, agreement is compulsory. That agreement can be either oral or it can be in writing. Oral agreement also is valid. Written agreement is also valid. But it is preferred to have in writing to avoid any disputes. Now, if an agreement is in writing, it is called as partnership deed. And we have discussed the contents of the partnership deed. I'm not going in detail again. Now, registration of the partnership deed is not compulsory. That is optional. Having agreement is compulsory, but registration is not compulsory. It is optional. We saw that also. Then we saw important point that, sir, in case of absence of partnership deed or partnership deed is there, but they forgot to mention certain points specifically. In that case, what will we do? So here one more query that popped up is, sir, in case if the partnership that is agreed is oral mein, that is you have recording, will the recording serve as a valid evidence? Yes. So that will be treated as equal to partnership deed. So to some extent, even the oral agreement is allowed. So in your questions, what you get, they will tell you the agreement is either in written or oral. Both are valid. Now, when oral is also not there, written also is not there, nothing is there. In that case, you have to follow the following points. So the first point is, in the absence of partnership deed or partnership deed is there, but you forgot to mention what is the profit sharing ratio. In that case, the provisions of Indian Partnership Act 1932 says that you have to distribute the profit equally. Okay. First point. Second point, partnership deed is absent, or oral agreement is absent, or agreement is there, but they forgot to mention the point. Which point? Regarding interest on capital. So capital is basically partner will give capital to the firm. In return, firm has to pay interest. So for firm, it is income or expense? Expense. Now that expenditure, can the firm incur? Can interest on capital be given by firm to partner? Not allowed. IOC interest on capital, not allowed. So if the partner wants interest on capital, so for us, for firm it is expense, means for partner is income. So if he wants interest, better get it document in the agreement, either orally or written, get somewhere documented. Same way for interest on drawing. Drawing means what? Firm is giving the drawings of money to the partner. So partner is withdrawing money from the firm. So who has to pay interest? Partner has to pay to the firm. So from firm's point of view, it is income. So can firm collect that income from the partner and there is no interest of drawing mentioned anywhere? Can the firm collect the interest on drawing? Not possible. So interest on drawing is not charged from the partners. So for partner, it is expense. For partner, it is charge. For firm, it is income. Then partnership agreement is not there. Oral is not there. Written also is not there. Or partnership agreement is there, but they forgot to mention what is interest on loan. So here you have to be very careful. If loan is given by partner to firm, it is going P to F. Then interest on capital is not mentioned anywhere. So can the firm say, just because interest is not agreed, we will not pay you interest? Interest on loan by partner. Partner is giving loan to the firm. So firm has to pay interest. So firm is taking a stand that just because the agreement is not there, I will not pay you interest. Is the firm's stand tenable? No. They have to pay. But it will be paid minimum at, not minimum, at flat 6%. So if partner wants more than 6%, what he should do? Get it in writing. If firm wants to pay less than 6%, better get it in writing. That is advisable. So this is loan given by partner to the firm. Now, if loan is given by firm to partner, interest not agreed. So what will happen at the end? 0%, not applicable, 0%. So 6%, be very careful. It is loan given by partner to firm, put this into your head very nicely. Because you're giving your board exams nearly after 11 months. So nearly after 12 months. So by that time, we have a lot of possibility that we'll forget it. So it is you have to ensure that everything is properly documented. So this point we discussed. Then remuneration means what? Salary, commission, etc. If it is not agreed anywhere in the partnership deed or partnership deed itself is missing, in that case, no salary, no remuneration, nothing. If you want salary, if you want remuneration, commission, it has to be captured in the agreement. 6th point, admission of a partner. A partner can be admitted only if all the partners agree. If any one objects, you cannot admit him as a partner. But in partnership agreement, you have agreed that if only one partners say yes, then they will admit. Like that, if there is any specific clause, they'll go with a specific clause. If any specific clause is not captured in the agreement, they will go with the general clause. What is general clause? This is the general clause. Am I clear? Yes, any specific point captured in the agreement means you'll go with the specific point. If specific point is not captured, then you will follow all these general points. General point given in the law. Any deviations from this? Not acceptable. Okay. So guys, comfortable all of you?
Sir?
Yes, boss.
Sir, if these aspects are agreed upon orally, then it would be applicable, right?
100% it's a valid agreement. It's a valid thing.
If it's oral, it would
orally, let's suppose you have some voice proof now. Otherwise, if there is no even voice recording, see, having it in a piece of paper is deed.
I know
having it in recording is oral. So you have evidence to support that this is what we have agreed. So it is acceptable.
Okay.
If nothing is there, you cannot prove what is accepted. Then you have to go with what law says.
Yes, sir.
Now, here, I think this point we are clear. This point we are clear. So this is clear. All this we have discussed. Excellent. So illustration 1, we did it. Illustration 2, I said homework. How many of you have completed the homework? Good, not bad. Others, those who have not raised your hands, can I know the reasons why not done? Of online people, I'll come to you. Just let me finish off, deal with this offline people. Yeah, okay, those who did not do the homework, raise your hands. Offline people, raise this properly. Right? You glanced it. Either reading it. Homework bit doesn't mean that you have to. Reading. You, aayega bhi. Tere koi question aayega. Online people, how many of you have gone through this second illustration? Gone through is also fine. Lakshana has gone through. Samrita, Ananya, Idika, Aditya, Akshit. Okay. Most of you. Last few people, Ritik, Janani, Hariharan, Abhishek Iyer. All of you have done it? Okay. Guys, there are few people still not switch on the video. Please switch it on. Ananya, video missing. Hariharan, Abhishek, video missing. Ritik, video missing. Okay.
So my camera isn't working, sir. I don't know why.
Okay, just
it's coming like this, sir. It's like black.
Okay.
I mean, I don't know.
Second illustrations. We'll do it very quickly. We'll do it very quickly. Harry and Gary. Guys, I'm telling you one thing very clearly. This book is fond of rhyming words. So don't be shocked. Every partner in real life will not be rhyming. But in this book, you'll find all rhyming partners. Enjoy nicely. Harry, Gary are partners in a firm. They do not have a partnership deed. They do not have partnership, but have agreed on the following. Agreed on the following. Agreed on the following. Partnership deed is not there, but agreed means orally agreed. So orally agreed. First one, salary to be paid to Harry 10,000 per month. Salary to be paid to Harry 10,000 per month. So to Harry we are going to pay salary. Gary to get commission of 10% on net profit. So for Harry, salary. For Gary, commission. Interest on capital 10%. Okay. Interest on drawing 10%. Okay. Partners cannot be admitted unless both the partners agree. So they've given a specific point. All these points is agreed orally. First of all these points are acceptable or not acceptable. If it is acceptable, we'll follow as per this. If it is not acceptable, we'll follow the general clause. Oral, na, agreed, na. They have documented it. That's what they've given agreed. No points, 5 points they've given. No. Let it be voice recording. Through a voice recording, I made a note. Accepted. No. Okay. Now there is a dispute. There is a dispute. How will the following dispute be resolved? First dispute is Gary demands salary. What did we promise to Gary? Online people, what did we promise to Gary?
To give 10% on net profit, sir.
Commission we promised, but he's demanding what? Salary in lieu of means instead of commission. He's telling, though we agreed that you'll give me commission, but instead of commission, you pay me salary equal to Harry. Is it acceptable? Can we?
No, sir.
This would have been acceptable when? Before
When
demanding.
it is mentioned in the partnership deed.
Yeah. So either this is the first oral agreement. So before you start working and demanding the money, you should have changed the oral terms and conditions. You should have got a new recording for me. Failing which, I'll go with the initial recording only. So by that virtue, the demand that Gary is doing, is it acceptable? Not acceptable. Guys, online people, do you agree with me?
Yes. I have doubts.
1 second, Kana. Partnership agreement may be written or oral. Both are allowed. Therefore, the terms agreed orally between Harry and Gary is a valid agreement. The demand of Gary to be paid salary equal to salary of Harry is not valid, because we have originally agreed to pay commission to him. Had you want salary, you should have got it revised. The terms and conditions before demanding the money should have been revised, agreed upon, then acted. Then demand is fine. But you've agreed something. At the end, when now it is time to give the payment, if you change and ask, then what is the point? So this is not acceptable. Gary's challenge is not tenable. Yes, somebody said online they have some doubt.
The second one, if there's a net loss, so Gary will not get commission, right?
Correct. So in case, let's suppose here the Gary's terms and conditions is he'll get 10% on net profit. Only if there is a profit, he'll get commission. Though there's a loss, he'll not get anything. Now there's a loss and Gary is still asking commission. Will it be acceptable? No. Because what did we agree? Commission 10% on profit. On loss, you'll get nothing.
If you mention respective of profit,
then had they told Gary will get 10% commission point blank, 10%, let's suppose on sale, you have to tell 10% of what? If they say 10% on sale, then you have to give him whether there is profit or loss. But here they specifically told that commission is linked to what? Profit. So if there is a loss, how will I give? Okay, online people, can I move on?
So one more doubt, sir.
Yes, please ask me.
So if Gary had to get salary, then whether it's profit or loss, he will get it, sir.
You mean to say if Gary is supposed to get a salary? Okay, now this point I'll explain you when I start doing the P&L appropriation account, because there is a concept, something called as charge against profit and appropriation of profit. So this question I'll make you understand when I come to the P&L appropriation part. So just since you're asking if salary is to be treated as a charge against profit, then yes, he has to get the money irrespective of profit. But if it is not a charge against profit, if it is treated as appropriation of profit, then he can get only salary if there is a profit. Now this, if you have not understood, leave it. You'll understand in the upcoming classes.
Sir, recorded oral agreement is treated as partnership deed, sir.
100%. It is a valid, it's not a partnership deed, it is a valid agreement. If it is in writing, it is deed. If it is there in recording form, it is a oral agreement. Agreement.
Okay, sir. So in this case, all the things that have been said, like salary, payment, and interest allowed, will be given.
Yes. If everything is satisfied, it has to be given. All these 5 points has to be given.
Okay, sir.
Harry demands that his son Sherry, see again rhyming. Harry, Sherry, Gary. Harry demands that his son Sherry be admitted as a partner for 25% share to be given out of a share of profits. Gary does not agree to Sherry's admission as a partner. Okay, not okay. ये क्यों लेके जा रहे हैं? अच्छा, you want to sit here? हाँ ठीक है, okay. So next time एक बोल देना मेरे को. I will give that there itself. Now come here, no, little bit. थोड़ा अंदर आ जाओ, उसको दिखाई दे. Guys, shh. Gary does not agree to Sherry's admission. Is Gary right or wrong?
Right, sir.
Gary is right because the 5th clause says that partner cannot be admitted unless both of them agree. Both means what? All the partners. Because Harry and Gary are 2 partners. So both of them agree. Here Gary is not agreeing. So obviously Harry cannot bring his son Sherry into business. Confused हो गया क्या बोल रहा हूँ? नहीं पाप लगेगा, तू चुप रहे. Now clear with this point. So till this we have done in the last class. So today's new concept will begin with. So already I have discussed something called as charge against profit. Today I'll be discussing appropriation of profit. So let's do a quick recap of what is charge against profit. Charge means what? You have to record it irrespective of whether you have profit or loss. Charge against profit means it is either expense or loss. Anything that will reduce the profit is charge. So what can reduce profit? Expense or loss. So charge against profit nature, it is an expense, hence deducted from revenue to determine the net profit or loss during the year. Point number 1. Second and very important point, sir, this item you call it as charge against profit. No, where am I supposed to record? You are supposed to record this in the P&L account. It is to be debited. P&L account is what account? Personal, real or nominal? Look at it, personal history. Online people, you are also supposed to respond. Nominal account. Nominal account, what is the rule? देखो बहुत हंसी आ रही है, तेरे से पूछूंगा मैं. Debit all expense and losses, credit all incomes and gains. So charge is an expense, so debited to P&L account. Any problem do you guys have? No problem. Little slow. Okay. Debited is fine. Priority, it is allowed before appropriation of profit. Now I'll just give you a rough idea. Once upon a time, when you used to study 11th standard, we prepared financial statement. Under financial statement, what is the first document? Online people, financial statement.
Trading account.
Trading and P&L account, first document. Second document is balance sheet. Trading and P&L, we had 2 parts. Trading and P&L, 2 parts. Okay, this is for a sole proprietorship concern. Now in partnership, you will have trading account, you will have P&L account. Additionally, you will have one more account called as P&L appropriation account. So in sole proprietorship concern, 2 segments, trading account, P&L account. In partnership, there is an extension called as P&L appropriation account. In trading and P&L account, you will record the same items what you have learned in your 11th standard. No deviations. For example, in trading account, what do you record? Sales, closing stock. Italy, a loss somewhere. Focus here. Okay. Sales and closing stock. Okay. No doubts here. I'm just asking a question. I don't expect answer now, but think about it. Why is closing stock appearing in the trading account? I don't want last year students to answer, nor I remember people who came in for admissions. I asked this question and we are discussed. So I don't want anybody to answer. Others who don't know, I'm just trying to put some curiosity in your mind. Closing stock. This is trading and P&L account. You said nominal account. Debit all expense and losses, credit all income and gain. In debit side, you record all expense and losses. Credit side, you record income and gain. Sales is income, record makes sense. Why is closing stock recorded here? You have to give me an answer.
Sir, the stock sold for next year, sir. It's like income.
Stock sold for next year. Next year you should record. No, why are you recording this year?
Sir, it's
no answer. I'm not taking any answer. I'm not taking answer. I'm just putting a thought process into your mind. Think and come. I'll deal with this separately. Second. Shh. Opening stock is appearing in the debit side, expenditure side. So the nature of opening stock is asset, liability, income, expense, gain, loss. What is the nature? So all those people who said it is asset, you are terribly wrong. Okay, I'm just putting that curiosity in your mind. I'm not going to answer to any of these queries. So debit side, what do you capture? Net purchases, purchase minus purchase return. And direct expenses means what? All the expenses relating to manufacturing, plus all the expense that is incurred in relation to buying of goods and raw materials. So these are direct expenses. We have studied in 11th standard. So this will give birth to gross profit or gross loss. So gross profit will come here. Gross loss means it will come here. Then in the P&L account, normally what do you capture? You capture all the indirect expenses. Indirect expenses are those expenditure which is pertaining to selling of the products, distribution of the products, selling, advertisement will come under the selling and distribution. Wait. Let me talk. Shh. Fees who gave to whom? Who should talk? I should talk. You should only listen. So in indirect expenses, you'll have selling and distribution expense. All the expenses pertaining to selling of the business. All the expenses pertaining to distribution. Here, all the expenses pertaining to distribution. All the expenses pertaining to administration of the business. Your depreciation, other expenses, all these are indirect expenditure. The expenditure which is indirectly happening in the business. This will come. So from gross profit, you will minus indirect expenses, add indirect income. If there is any indirect income, you'll add. You'll get net profit. Now, here, in this indirect expenses, you have not considered any expenditure that you're going to pay to the partner. So that we are going to deal one by one now. So now any expenditure that you have to pay to the partner will either be charged against profit or it will be appropriation. Now your interest on loan by partner, that is loan given by partner to firm, loan given by partner to firm. So firm has to pay interest. Firm has to pay interest. So interest is income or expense? Expense. So this is that expenditure. Now the question is, sir, this expense should be treated as a charge or should be treated as appropriation? So here you treat it as charge because when a person is giving as a loan, this person is treated as a third party. So all the third party expenditure has to be treated as charge against profit only. So charge against profit is something you have to give them that money. You have to record the expenditure, whether there is profit or loss. Now there are certain items, that is this profit what you get from the P&L account. No, you'll transfer this to P&L appropriation account, and here you'll capture some items. And the rule here is that, for example, salary that is given to the partner, you will give salary to the partner only there is a profit. If there is a loss, no salary. So charge against profit means what? If something is treated as charge against profit, if something is to be treated as charge against profit, you have to record that expenditure irrespective of whether there is profit or loss. But if you treat something as appropriation item, you will record that expenditure and make the payment only if there is profit. Are you clear? So I mean, again, I'm going back, not going too much in detail. I'll be discussing all this point one by one in detail. Now, charge against profit is an expenditure that is to be allowed before appropriation. So allowed means what? Recorded before you appropriate. Correct only, no? Because we record P&L first as a charge against profit and then only appropriation. So which means charge against profit comes first, appropriation comes later. In trading and P&L, everything but that we record is charge against profit. And whatever we record in P&L appropriation is appropriation of profit. So what is appropriation meaning? Everything I'll be discussing. So this point I just wanted to justify. It says that charge against profit wala item will be recorded before you record the appropriation of profit. So P&L comes before the appropriation. So you record this first, then you record this. Any problem in this? Online people, don't go too much into depth now because the entire next 2-3 classes are revolving around this only. So all your in-depth questions, please hold. This plain concept, what I'm telling you, you're understanding or not understanding, that alone you confirm. That I'll discuss. What should I repeat? Appropriation I'm yet to discuss. Ye wala samajh mein aaya? Like what is the order? First you'll record charge against profit, then appropriation. Appropriation I'll discuss what it is. Example of charge against profit. rent paid to the partner. Rent paid to the partner. So partner is having some building. That building partner has given on rent to whom? Firm. So firm is paying rent. So firm is saying that since we don't have sufficient profit, since the business is into loss, we will not pay you rent. Is it acceptable? No. The way you treat, I mean, had you taken this premises from any third party, how you would have treated the third party? Same way you are supposed to treat this partner also if he's giving the premises to you on rent. So normally, if any partner gives his building to the rent to the firm, it has to be by default a charge against profit wala item only. Clear this point? I repeat one more time. If any partner is giving his building, his personal building on rent to the firm, by default, it is charge against profit, which means you have to pay him rent. You have to record the rent, whether the business into profit or into loss. One item. So charge against profit, one item I explained. Second is loan given by partner to firm. So firm will pay interest. This interest is also by default a charge against item only. Had you taken the loan from the third party, how you would have paid the interest? The same commitment you should have towards the partner also. So interest to be paid by the firm, is treated as charge against profit. So which means you will record that in the P&L account. So rent and interest on loan by partner will be recorded in P&L account as charge against profit, which means you will not be bothered about what is my profit and loss. Let me complete, please. Then I'll come back. Now this is charge against profit. Now what is appropriation of profit? Appropriation of profit means appropriation meaning is distribution. Distribution of profit. Distribution means what? Whatever is available, I'll distribute that only. Can I distribute something which I don't have in my hand? So I will give salary to the partner only if there is profit available. No profit, no salary. So your salary to the partner to be treated as appropriation of profit. Appropriation means what? Distribution. Distribute means what? Whatever is you have available with you in hand, whatever you have, that only you can distribute. So distribution of what? Distribution of profit. So profit, for example, in this document we saw, no, there's a profit coming from P&L account. How much? 6 lakh. So this 6 lakh, you have to distribute the profit in different forms as agreed in the partnership deed. The 6 lakh will be distributed in form of salary, in form of commission, in form of your interest on capital. Like that, you will distribute as agreed in the partnership deed. And after such distribution, if there is some excess profit left over, then that excess profit will be distributed in the profit sharing ratio. I repeat one more time. Now from the P&L, let's suppose there is a profit of 6 lakh rupees. This 6 lakh profit, how to distribute, you would have agreed in the partnership deed. So as per that, you have to keep on distributing. So let's suppose the 6 lakh, you have agreed that 6 lakh is the net profit coming from P&L account. So this 6 lakh in the partnership deed, they have agreed that, okay, partner A should get a salary of 50,000 rupees. Partner B should get a salary of 50,000 rupees. So salary is one mode of distribution of this profit. Then you would have agreed on commission, that A should get so much commission, B should get so much commission. Then you would have agreed on interest on capital. So all these three are expenditure for the firm. So this much to A, B, and C. So let's suppose all this put together, 6 items put together. Let's suppose it is 5 lakh rupees is the total item. So out of 6 lakh, 5 lakh you have distributed in form of salary, commission, and IOC. Interest on capital. IOC is interest on capital. So this is called as distribution of profit. Despite this distribution, I still have one more lakh left. So this 1 lakh you will distribute in the profit sharing ratio. Let's suppose the profit sharing ratio is agreed equal. So this you will distribute in the ratio of 1:1, 50-50. So I can give salary only if there is profit available. I will give commission, IOC only if profit is available. So these items, that is salary, commission, remuneration, IOC, is not called as charge against profit. It is called as appropriation of profit. Why do I call this appropriation? Because I can pay salary only if I have profit. I can pay commission only if I have profit. I can pay IOC only if I have profit. You guys have to involve. If you orally tell no, you will have that attraction. Online people and some of the offline people, I can see that you are just observing it. Observing what will happen is in no time, your brain will go into slippery mode. So you'll be physically present, your eyes will be wide open, but brain will not be functioning. Trust me, it happens with me also. If I go to any seminars, which is boring, even now, I can completely have that kind of feeling. In 10 minutes, I'll be off. So either the person who is speaking opposite should be interesting. If he's interesting, but still if I'm sleeping, then which means I have not taken sufficient efforts to participate. So you have to take efforts to participate. It has to be two-way connected. So first question, am I interactive enough?
Yes.
Am I teaching well?
Yes.
Am I engaging all of you?
Yes.
So I'm doing my part. So what is your part? You have to equally participate. It's a teamwork. Only one person running the show doesn't make sense. So both say teamwork. So what should you do? You have to keep on answering the questions. You have to make this atmosphere most fun filling. Make fun of each other. I'm okay with that. Online people, do you get that?
Yes, sir.
Yes, sir.
Fantastic. Fantastic. So what will we be discussing? That we said this 1 lakh is distributed. Appropriation. We're discussing on appropriation. So what is appropriation item? Anything which is distributable provided profit is there. That is appropriation. No profit means no distribution. So what are the examples of that? Salary, interest on capital. Salary means commission also included, interest on capital. Something is called as transfer to general reserve. What is this? I'll discuss when you come to a practical question based on this. We have a practical question, not 1, 2, 3 questions are there. That time I'll discuss what is this concept. Now just understand the meaning. It means distribution of net profit. It means distribution of net profit. So 6 lakh was what? So what did we do? The 6 lakh we distributed in form of salary, commission, IOC, and the profit. It means distribution of net profit for the year among the partners under different heads, salary, IOC, commission, as per the partnership deal. It is debited to the P&L account because all these are expenses now. If you are giving those expenditure, you have to debit it because it is nominal account. It is appropriated after accounting all charges. Charges means what? The item that you capture in the trading and P&L account is charges. So after you prepare trading and P&L only, you are supposed to prepare P&L appropriation account. Now tell me if anybody's got any doubt with charge against profit and appropriation. Yes, Bhavyash.
Charge appropriation of profit. Like today I have a loss. Next year I have a profit. So double salary.
Okay, come again.
Today I have a loss.
This today means this first year you are having a loss. Okay.
I'm having a loss. I'm not able to pay the salary to my partner.
Correct.
So
accumulation, will it happen?
Yeah.
No. So the question what Bhavyash is asking is, sir, first year of the business it is loss. So you're not giving any salary to the partners. So next year there is a profit. So first year salary and second year salary, will it get accumulated and be given? Now, if nothing is mentioned in agreement, it will not be accumulated. Now, in the partnership deed, if it is agreed between the partners that if in any particular year there is a loss, if the salary is not paid, the same will get accumulated and be paid in the next year. Like that, if it is agreed specifically, then yes, accumulation and payment is allowed. But if nothing is mentioned in the clause, the general clause that is applicable is no accumulation possible. Clear with this? Good. You guys, this batch, I'm little hopeful that, I'm getting that good vibe that you'll get some good scores because I can see good application of mine. This kind of questions, I'm seeing from both online and offline people, there's some different unique questions that you're asking. And I'm also equally excited to answer. So don't stop yourself with this unique questions. You should convert it to marks also. So I'm really hoping that, we set some good high bars of 100 marks, in this batch. Yes, boss.
In case if we agree that we are paying commission, no matter profit or loss, so that will be considered as a charge against.
The question now that has been asked is that, sir, commission 10% on sale has been agreed. And it is agreed that it will be paid no matter there is profit and loss. Like that, if that term is there, then this commission is not appropriation. This becomes a charge. Now I'll tell you, we'll be discussing this in future, but again, I'm telling you since she asked the point. Salary, commission, interest on capital. If agreed in the partnership deal, you can treat it as charge. That is in agreement if they agree that salary, commission, IOC has to be paid no matter the profit and loss, then that becomes a charge to be recorded in PM. So regarding this point, there are a few questions also coming up in the future. So yes, if you specifically agree that an item of appropriation to be treated as charge, then it has to be treated as charge. But if nothing is agreed, then those items are treated as appropriation.
So,
1 second, I'm coming. Yeah.
Last year in P&L, at the end of the P&L, we write the manager's commission.
Correct. Manager's commission means staff or partner?
Staff.
Staff. Okay.
So won't that be appropriation?
Staff is not a partner. He's a third party. So any commission promised or any salary that is promised to a staff will always be charged. Because if you tell him, if I have a profit, I'll pay you, or else I'll not pay you, will not come to you.
No, but don't you remember that if we don't have net profit, that we won't mention the commission to manager?
If your manager's commission, that is a staff, his manager's commission is linked with profit, then if profit is there, you'll pay, or else you'll not pay. If manager's commission is linked to the sales, then you have to pay him no matter the profit and loss. See, manager's commission percentage, if it is linked to the profitability, if there is a profit, I'll pay, or else I'll not. So whatever be the profit, if profit is there, you'll have to pay. So it is a charge.
So that would be appropriation.
No, it is something you have to pay him. So it's not appropriation, it is a charge. Because why it is a charge? Because you will take this to P&L, not appropriation. Why? Because if any commission that is paid to the manager, it is something which is a part of a P&L. Any expenditure that we owe to a third party or equivalent to third party will go to your P&L account. Anything that has to be paid to the partner alone will come into appropriation account. So manager, you said he's a staff. By default, he comes under the third party category. So his expenditure, if to be given, will be captured in the P&L account only. So by default, it becomes a charge. Clear with the doubt? Okay. Now next part. Next concept, interest loan by partner. Online, yes, somebody called me.
So I have a doubt, sir. So if suppose A and B are two partners, sir, and the net profit of the firm is like 25,000, sir. But the 25,000 is enough for to give the salary to A, sir. Then what will we go for salary?
So your query will be answered, not today's class, will be answered in Sunday's class, because we have a few questions based on that. So what happens when the profit is not sufficient?
Yes, sir.
Profit is not sufficient. The item of appropriations are more, profit is less. So that will be answered in Sunday's class.
Okay, sir.
Now, next concept is interest on loan. Interest on loan. Which loan? Loan given by partner to the firm. Hey, wait, gone. Yeah, by default is not 6%. That is when the absence of partnership need only that will get triggered. To understand the concept, this is a partner. This is a partner. This is a firm. So partner is giving loan to firm. So for firm, it is asset or liability. That is a liability because they have to pay in future. What is liability? Anything that the firm has to pay to somebody in future is liability. Okay. Let me complete. Don't interrupt, please. Please. Guys, one request to all of you. Only when I complete the concept, please ask doubt. If you interrupt in between, no, and too many doubts if you have, no, we'll be lagging behind too much. So accumulated doubts, I'll give you some doubt section that alone, that time if you ask, it will be little convenient. Now, firm has to pay in return what? Interest. No, we are not debating that whether interest agreement is there or not there. That we are not discussing. I'm telling you, if interest is supposed to be paid. Now, for loan giving, what will be the entry? If partner gives loan to the firm, no, firm what entry they'll record? See, this is why I'm telling. Concentration. My question was, if partner gives loan to the firm, what is the entry the firm will record? Answer.
So interest on loan to partner debit.
Wrong. On second, you're wrong. बराबर है बोल.
Cash in bank debit to the partner.
Partner's loan. Where is interest coming into picture? What is my query? I am telling you, if the partner is giving loan to the firm, if firm is taking the loan, what is the loan entry? Where is interest coming in between? Firm is receiving money. Cash or bank account debit. Cash bank is real account. When money comes in, debit what comes in? To what? The money what is coming, you cannot keep this money permanently. You have to remember to pay him in future. And we are Gajani. We will forget. So what we have to do? We cannot write on body like Gajani does. No? So our body is balance sheet. Our body is books of accounts. So to partner or to loan by partner. All of you know who is Gajani? When Gajani movie came, we were all born first of all.
Yes,
We born 2006 movie came. Okay. But still you will be only this much now. How did you watch that movie? But you have that interest to watch. Gajani. Surprised. No, after let's say 5-6 years down the line, if new students come, no, that time I should ask, because those people will be not even born, no. Okay, loan by partner. Cash in bank to loan by partner. The nature here it is asset, here it is liability. Let's say 5 lakh a loan. Now firm has to pay interest. Let's suppose interest agreed is 10%. So at the end of the year, 31st of March, you have to pass an entry. What will be the interest due entry? This is something which is relevant to your 11th standard. So don't give me that blank look.
Outstanding wali entry.
Hey, outstanding. Who outstanding wali entry? Okay, tell me.
So two partners.
Yeah, she's right, but she's right, but not fully right. Wait, offline, wait. Online, let me ask. What is the thing that we are left over? Online, I'm giving this opportunity. My question is very simple. Loan entry passed. Shh. Guys, please. Interest due entry I have to record. So what is the interest due entry? Interest due but not paid. What is the entry?
Outstanding interest.
Outstanding interest
Online
to
name.
interest.
Loudly.
Outstanding interest to interest.
Wrong. Outstanding interest to interest, wrong.
Sir, interest on.
Oh, sorry, interest
The
to
interest to outstanding interest.
Wait. Outstanding interest to interest, you said, no? I'll come.
No. I just
No.
mixed it up.
Wait.
It's a liability because outstanding interest and interest is an expense.
Say, simple issue. Got it. See, for firm, interest is income or expense? Expense. So debit all expense and losses. So you have credited. Means it becomes income. So it should be
Interest to interest outstanding.
Account debit all expense and losses. To outstanding interest. Wait, I'm coming. 11th standard. First we'll do 11th. No. Then we'll come to 12th. So interest on loan to outstanding interest. So the nature of this is expense. The nature of this is liability. But in partnership, what they tell us, see, you have a separate loan by partner account. So this liability account separate. This liability account separate. Two separate liability account means it will be headache for me. So if a partner asks me, what is the total amount that you have to pay me? Give me one shot amount, then I have to go to two different ledger and total it. So instead what experts suggested is outstanding interest account, instead of creating a separate new ledger, you credit the same account. What is the nature of LBP account? Liability, no. Outstanding interest also is liability. So nature is liability. Why do you have two different ledger? If you are creating two different ledger, you have to maintain two different ledger till the very end. Unnecessarily headache and confusion. So instead of creating a new ledger, you record it in the loan by partner account itself. So interest on loan, the nature is what? Expense. And this is what? Liability. Expense to liability, whenever you pass entry, this is called as a due entry. Due. You know what is due? Due entry. Due means what? Due to be paid. Yet to be paid. So due entry. So let me take you to this point. Interest on loan to loan by partner. Correct, no? This is called as a due entry. Please make a note in this book. Why I'm telling is because sometime in practical question, they'll tell you pass the due entry. So that time you'll be blinking what is due entry, sir never taught. So make a note that this is called as a due entry. Now guys, once the due entry is passed, let's suppose the payment is happening later. Payment is happening later. So what will be the payment entry? This liability needs to be reversed. So reversal of liability. In your entire 12th standard, majority will be following modern rule. Guys, all those who have studied with me, you know what is golden rule and modern rule. But all those who have not studied with me, please understand there's something called as golden rule, which is also called as traditional rule. Nothing but personal account, real account, and nominal account. In 11th standard, I proved that golden rule and traditional rule are not enough to solve all the entries. Yes, that is she's speaking out of experience. So this is not applicable. So in place of that, we will be using something called as modern rule, which is called as American approach, which is also called as accounting equation approach. So here they say that any transaction that is happening in the business, you will either categorize it as asset, either it will be asset, or it will be liability or capital. Liability, capital, two separate items, but for our understanding, we combined it. So either it will be liability or capital, or it will be income or gain, or it will be expense or loss. Anything you take, anything and everything, any transaction you take, you'll be either be able to classify that as asset or liability capital or income gain or expense loss. So asset by default, what balance it is? Debit balance. So to increase asset, that is add asset, I need to debit. To decrease credit. If it is a debit balance item, for a debit balance item, the hero is what? Debit. So hero will increase the value of that asset. In any movie, hero adds the value to that movie. Now liability and capital, what balance? Credit balance. To increase or add a credit balance item, to increase the liability item, I need to further credit. To decrease a liability item, I need to debit. For income and gain, the balance is nature credit balance. Credit balance. To increase plus credit, to decrease minus debit. Expense and loss are debit balance item. To increase, add debit. To decrease, minus credit. If anybody is not clear with this, I suggest you to go and watch my 11th standard class. 11th, there are certain topics which will carry forward in 12th. That is, without those topics, you cannot survive in 12th. In that, the first topic is rules of debit and credit. Your chapter 6 of TS Grewal, very, very important. Second is journal entry topic is very, very important because in journal, we have done all the questions of the TS Grewal book illustration in depth. Everything has been worked out. We have discussed all the concept time and again, so much time revised so that everything will fit into your brain very nicely. Third important topic is ledger. Ledger, you should be able to do ledger without the help of journal. In your first 2 volumes, that is partnership topic and share capital topic, it is full of journal and ledger only. Sometimes you will exclusively get a question in the exam that prepare a ledger alone. Some people are handicapped, which means what? They cannot do the ledger without doing journal. So they have the habit of doing the journal entry in the rough column, and based on that, they do ledger. That will waste time for you, and you'll not be able to complete the paper on time. So you should be able to do ledger independent of journal. So ledger is very important. Then fourth one is accounting equation topic is to some extent important because the accounting equation topics gives you a visibility or mindset. How an entry will impact the financial statement, that visibility is developed. So when we did 11th, we never did accounting equation first. In most of the school or every school, they have done accounting equation first, then everything else. That is wrong. When you're doing accounting equation, before that, you should have completed your rules, journal, ledger. By the time you understand the visibility of the financial statement, and then when you come back into accounting equation, your tempo is perfectly set. Next topic that you have to do is depreciation, very, very important. Because in cash flow, without depreciation, you cannot survive. Sixth one, financial statement topic, how to prepare trading P&L account. Balance sheet is very important because in your first 2 volumes, it is full of balance sheet, full of ledger items, full of trading and P&L. P&L trading, not too much, but P&L appropriation will come, which is based on trading and P&L only. And 7th one is very, very important, adjustment of financial statement, all the kinds of adjustment. In that one adjustment which will have problem is that provision for doubtful debt. You cannot survive with the concept of provision for doubtful debt. That is, you cannot survive your cash flow statement without the concept of provision. So all those people who have not done these topics properly, by May end, I'm giving a target, finish it. Even if you're wanting to, some people have already got recorded class. So your deadline is May end. Why? Because once June starts, you will be under tremendous pressure. You'll be bombarded with back-to-back classes, revision, test, project work, homework. You will not have the breathing space to, sit and watch any recorded class. So if you have a feeling that your 11th base is not strong, that is, you have done it nicely well, but you're not super strong, do a revision. If you feel that base itself is not there, get the recorded class and start watching. And May end is the target by which you have to finish everything. Now coming back. Depreciation, normal depreciation method, provision for depreciation method, completely will come. Ledger is very important to be more precise. Journal is not required. Ledger, how to prepare a machinery account, how to prepare an asset account, how to prepare the provision for depreciation ledger. These are important. Without which you cannot do. Without which you cannot do the cash flow. Now coming back. Now we will discuss the due entry. The second entry was what? Payment entry. Now guys, you created a liability here. To create liability is trade balance. To create it, you have credited it. Now I'm making the payment. Once you make the payment, the liability has to be reversed now. Once I make the payment, liability has to be reversed. To reverse liability, what am I supposed to do? Debit. So loan by partner account debit to cash. When I make the payment, my cash balance is reduces. When my asset reduces, I have to minus. Minus of asset means credit. So debit and credit is nothing but plus and minus. We have understood very clearly in 11th standard. Debit and credit is nothing but plus and minus. But plus and minus, if you use it, it will be confusing. Double entry system cannot be properly designed using plus and minus. That is why they have brought out with certain rules and regulations with debit and credit, which in itself will take care of plus and minus. If you do debit and credit properly, it will inherently do plus and minus. How? Let's suppose I'm opening a ledger here. 10 lakh is here, 2 lakh is here. What is the balance? 8 lakh. So what did you do? 10 minus 2. Did you do minus by conscious? The format is designed in such a way that you know the difference I have to take and this will be balanced. So what did you do? 10 minus 2 is 8. Credit minus debit is 8. So the concept of debit credit is designed in such a way that it in itself will do the plus and minus for you without any confusions. That is how this concept is beautifully been designed. So on payment of interest, loan by partner to cash in bank. Now, one entry that often people forget is closing entry, which Tanish will never forget. Something called as closing entry. So can people tell? My question goes to online people. What does closing entry mean? What does closing entry mean?
That is used to close the books of accounts.
Can you be more specific?
Bring both the debit and credit ledger accounts to the financial statements.
Who's saying this? Ananya. No, Ananya, you'll not answer. All the new people. What does closing entry mean? What is the significance of closing entry? If I don't pass a closing entry, what will be the impact? Only I want new people to answer. Aditya, Akshat.
Sir, is it the last entry in the journal?
Why? But why are we doing that? Last entry is fine. Why?
Sir, to bring the debit and credit equal.
To bring debit and credit equal. So if you get debit and credit equal, what are you achieving in that?
The account will be closed, sir.
No.
To
The
realize
balance sheet.
the financial position of the business in the end of the year.
Okay. Offline people now. Hey, not you. New people. Why? What is the significance of passing the closing entry? If I don't pass the closing entry, what will happen? New people. You are older. फायदा ये है कि मैं तेरे को क्वेश्चन नहीं पूछ रहा हूं, इतना विश्वास है. Why are we transferring? Why we have to appear? What is the ultimate motive of appearing? That is what is important, na? Now listen to very carefully. Shh. Shh. When you pass a sale entry, the sale amount is hanging in the sale ledger. When you pass a purchase entry, the purchase expenditure is hanging in the purchase ledger. When you pass a salary entry, the salary amount is hanging in the salary ledger. So every item is hanging in the respective room. If all of them do not come to one single place, how will I get accumulated income? How will I get accumulated expenses? And if I don't make these people knock off with each other, if I don't do WWF with them, how will I get the result of profit and loss? So the purpose of closing entry is that it's like, I give a common example. Let's suppose all of us have gone to Goa for partying. Imagine, I'm not taking, I'm just telling, imagine. All of us are going, with the motive to enjoy. Now, all of you have got your single room. Everybody is entered in room, looking at nice fluffy bed. You only feel like sleeping and not coming out. Will the motive of to enjoy in Goa, is it achieved? No, motive is achieved when you come out of your respective rooms, we gather someplace and do dumb din chicken, then it makes sense. If you are at home, at room, what is that? Same way, when you pass in any entry, any expense entry or income entry, those are hanging in the respective rooms. Sale room, purchase room, salary room, wages room. So the purpose of accounts is not achieved. What is the purpose of accounts? To get the first motive is to get the profit and loss. So for me to get the profit and loss, I need to know total accumulated expenses. So let's say boys and girls are going on the trip. So I need to know total how many boys, total how many girls. So total expenditure, total income. Then I need to WWF. End result is profit and loss. So same way, guys, here the interest on loan by partner to loan by partner is hanging in the interest account only. So I have to transfer it where? To the P&L account. So interest on loan by partner is currently in debit. I have to take him out from debit. I have to remove from room. So I have to give a corresponding credit. So interest on loan by partner will be in credit. So when you do this, the debit and credit is knocked off. So the entire expenditure is transferred where? To P&L account. So this expenditure from the interest account is now transferred to P&L account. That's why in P&L account, 2 interest will come on debit side. Have you ever imagined how 2 interest is coming? When you pass a due entry, interest is in debit. Hello, online people. When you pass an entry, due entry, interest expense to liability is there, no? With this entry, you will have 2 interest expense coming here in the P&L account. Not possible. So have you ever imagined how an item is coming in the debit side of P&L account? Only by passing a closing entry. So closing entry means what? The expense which is in debit, I have to close it by transferring to. So interest expense credit. And debit is what? Debit will be the place where you transfer it. So it will be P&L account. So it means what? The expense which was currently in the interest account is transferred from interest account to P&L account. So expenses is debited to P&L account. So P&L account is a place where all the expenses get accumulated. The debit side of the P&L account is a place where all the expenses get accumulated. Credit side is a place where all the incomes get accumulated. So that is the significance of the closing entry, which means that all the nominal accounts will be transferred to trading or P&L account. It has to be closed by transferring to trading and P&L account. It will be closed. See here, interest expense debit with the same amount you're crediting. Debit means plus, credit means minus. Debit is minus, credit is plus. So ultimate result is 0. At the end of the year, all the nominal account balance will be 0. Whereas all the balance sheet items will have a balance carried on and brought down, because balance sheet items are never closed. Since it is not closed, their value is appearing in the balance sheet. Am I clear with what I'm saying, online people?
Yes, sir.
I'm not giving a break because the duration is already cut short. You know, from 6:30, we're already starting at 7:15. 3 minutes. What will you do with 3 minutes break?
6:36.
Ah.
Sir, only one.
What break you want? Sorry, okay, I'm feeling pity on you. 8:10, 8:15 sharp, I'll start. Break, take a break, have a Kit Kat. Illustration 3 will start after that. Yes, people, welcome back to the break. So let's continue. So guys, before going to illustration 3, what I'm feeling is we'll go to illustration 4 and come back to 3. Amit, Bimal, Chaman. Chaman, tu galat mat samajh. Amit, Bimal, Chaman are partners sharing profits and losses equally. Amit and Chaman gave loans to the firm on 1st October. Who has given loan, guys? Amit and Chaman. It is loan by partner or loan by firm?
Loan by partner.
Very good. Date is 1st October, 1 lakh, 150 respectively. It is agreed that interest is 9% per annum will be paid on loan. Okay. Books of accounts of the firm are closed 31st March every year. So which financial year we are following? April, March. April, March. Interest on loan is yet to be paid on 31st March, which means what? It is outstanding. So you have to pass the outstanding interest ka entry. Okay. Pass journal entries in the books of accounts of the firm and prepare the loan account. So journal and ledger. So they ask you to pass the journal entries. So my question to all of you is that when the loan is given on 1st October, the loan entry will be record or not record? They have not specifically told you to record only interest entry. So in this question, whatever and wherever the journal entries are possible, you will capture. So they will tell you either pass necessary journal entries or pass journal entries. If they want to be more specific, they'll be like pass journal entries for interest. If they say specifically interest means only interest. If nothing is mentioned, they will record the even loan entry.
So is this agreement written?
If nothing is mentioned, agreement is there. This is the understanding. If the agreement is not there, if there is any dispute, then they will tell you specifically. Here nothing is given, so we'll stick on to 9%. So my question to all of you guys. Now, before that, a lot of times I've seen, people not putting the format properly. When you're practicing, let's suppose you're practicing now in class or school or even at home, you do it rough entry. That is, if you do this question at home, how will you do? No, you'll directly do the journal entry. If you do that, the same habit continues, and you will find a lot of difficulties in the main exam, because your brain is habitual to what? Rough calculation, rough working. So what you're used to, that brain is able to only function that. So right from now, whenever you're practicing, practice with proper format, heading wherever required. For example, in books of Amit, Bimal and Chaman, this heading should be there. For recording this entry, for recording this heading, marks will not be awarded. But for not recording it, you'll get marks could be deducted. Nearly about quarter marks could be deducted. Quarter means 1/4, not that what you're thinking. Journal means journal. Harshit is like extra smile. Journal means it has to be there. Date, particulars, LF column, debit, credit is important. Debit, credit you write. If you don't write rupees, you'll miss mark. But while writing, you will not gain extra mark. But for missing it, you will lose the mark. I'm telling from the board examination point of view. So format is very important. Quickly write the heading in format, then we'll do the entries. Very quickly. I want the heading, guys. Please write in the books of Amit, Bimal and Chaman. Journal entry. Please write the format, heading, and draw the format. Sorry? Yeah. Here the firm name is the firm name is not given. In the absence of firm name, the partner's name will constitute the firm name. That's why the name is given here. Guys, if you're talking among yourself, there is a disturbance in the recording. So please, I will not entertain this. Done with the formatting? First entry you will record on which date? Date. 1st October. So 1/10/22. What will be the entry? Guys, the firm is receiving the money. So your asset balances goes up. Cash in bank is going up. Bank account debit.
22.
Bank account debit 2. Now 2 people are giving loan, guys. Amit and Chaman. So Amit's loan to Amit's loan account. Or loan by Amit account. Whatever. What have they followed? Loan by Amit account. We'll stick out to that itself. No, you cannot write just Amit. You have to mention the name of the ledger properly. Loan by Amit. Yes. If you just write Amit's loan, whether Amit is given loan or taken loan, how will you know?
So credit.
What if you write the debit entry wrongly as credit? Loan by Amit account. To loan by Chaman account. What is the amount? 1 lakh and 1,50,000. Now some people have this habit of writing 1L, 1.5L. It's not allowed. You write full 2,50,000, 1 lakh and 150. And some people don't have the habit of writing narration. Being loan, taken by Amit and Chaman. Being loan taken from Amit and Chaman. Anything, any English language you can write it, no hard and fast. But no journal, no mark. I mean, no narration, no mark. Sorry, no narration, no mark. This is very important. Now, please tell me, if I go in the sequence in order, what will be the next entry? This is the financial year. On 1/10, the loan is taken. So from here, what is the next event that is happening?
On next 1/10, the interest.
Why next 1/10, madam? 31st March, financial year is ending. We are following accrual base of accounting. Accrual base of accounting says what? Whatever expenditure is incurred in that period, you have to record. You're getting my point? So 31/3/2023, by following accrual system of accounting, you need to stop there and recognize the expenditure incurred so far. So now one mistake what people do here is that when they calculate the interest, they'll apply 1 lakh into 9% directly. But what you fail to understand is this loan is given on 1/10. Interest you will pay only for the period you enjoyed the money. So when you apply into 9% means 9% is for 12 months. Wait. I'm telling you 9% per annum. 9% per annum. Per annum is equal to what? 12 months. So if you do 1 lakh into 9 by 100, that will give you interest for 12 months. Did you enjoy this loan for 12 months? So proportionately you have to multiply with the period. So from 1/10 to 31/3, how many months you enjoyed this money?
6 months.
6 months. So into 6/12 will give you the proportionate interest. So this is the next place where people make mistake. In hurry burry, by mistakenly they put into 9% record the entry. So entry will be right, amount will be wrong. This is the disastrous thing that you can do to yourself. Everything you know. Some people don't know debit credit. You got that also right. But because of your carelessness, you got the answer wrong. Very simple. Amit is given loan when? On 1/10. Firm has received loan when? 1/10. Interest is 9% per annum. Per annum means what? 12 months. So on 1 lakh, if you multiply 9%, you will get interest for how many months? 12 months. So will firm pay you 12 months ka interest? No, because you enjoyed that only for 6 months. So multiply by 6 by 12. Now clear? Okay. Same way, Chaman also is given the loan on same date. So into 9% into 6 by 12. Now don't do the way I'm doing. I'm just showing you here, just for namesake, okay? What you will do it, you will do in the journal entry below itself. So 31,323, you have to pass a interest due entry. What is the entry? Interest on loan account debit, being an expense you debited to loan by Amit to loan by Chaman. Now LPA, I'm writing, you don't write, because this is my whiteboard. I can do whatever I want to do with my whiteboard. Your rough note, you write whatever you want now, but the same habit will continue in the exam. What will you do? You'll get under only and come. Now, what you can do is you can do the calculation here itself. Interest is equal to 1 lakh into 9 by 100 into 6 by 12. Next, 1,50,000 into 9 by 100 into 6 by 12. You don't have to create a separate working note and waste your time. Below itself, we can do it. And then write your narration. Or you write narration and below narration, you show the working. Anything is fine. You can write this even after narration, nothing wrong. And place the value here. So what is the interest amount? 4,500.
6,750.
6,750.
750 is it? Okay. If I total what this will be, online people? 11,250.
7,250, sir.
7,250.
Okay. 11,250. Super. Online people has got this right. Offline people, you got it? Now this is interest due entry. Now what people do know, they stop with this. What they fail to understand is accounting is incomplete without closing entry. So closing entry I'll pass on 1st April. No, 1st April. Closing entry when do we pass?
31st March.
Yeah. कैसे पूछ रही देख 11th क्या पढ़ी फिर मेरे साथ 31/3 तेरा टोन बोलने का नहीं था बदमाश है. Now guys, I'm closing what? Interest on loan account I'm going to close. Interest on loan is currently in debit. To close somebody, I need to put him in credit. So do interest on loan. I'm transferring this interest on loan where? Trading, P&L or P&L appropriation?
P&L account.
Online people, trading or P&L or P&L appropriation?
P&L account.
Why? Because it is a
Charge against profit.
charge against profit.
Charge against profit.
Very good, super.
So यही salary होता था appropriation.
Appropriation, correct. Salary होता था appropriation. Now this is total is 11,250. 11,250. Any problem, people?
So what about loan by Amit? And loan by Chaman?
What loan by Amit?
No. You wrote a loan by Amit.
That is a liability. Now guys,
Interest paid.
interest paid is not happened. No, look at the last line. Guys, very important. Don't write the payment entry and come. The last line is very clearly told that interest on loan is yet to be paid. So payment entry will not come. Hello? You've not paid, no. You'll stop with these 3 entries. That's why I told the basics is very important. If paid was given, had they told that interest is paid, then what will be my entry? Loan by Amit, loan by Chaman to cash in bank. To the extent what you've paid. Payment entry. What is payment entry? This is the payment entry, na? Loan by partner, you'll reverse the liability and make the payment. That is there subsequently. Wait, next transaction will come. Now they're asking to prepare the loan account. Loan account, please open the ledger. You can have 2 separate ledger. One is loan by Amit, loan by Chaman. No rough, proper format. Fast. You have to have the habit of doing the format fastly. Guys, you might feel that, sir, why are we doing format and wasting time? Why I'm doing it? Because if you do right from now fast, you will have the habit of doing the same format very fastly in the exam. People throughout the year, those who are not practicing the format, they are taking a lot of time in the board exams to do the format. So the more you write, the more faster it will become. So very quickly draw the format, very quickly. Loan by Amit account. In ledger, the debit and credit, if you don't write, marks will be deducted. Date particulars rupees, date particulars rupees. 3 columns on each side. Very fast. I'll come to that. Now, guys, first entry, is it affecting my loan account? Yes. So loan account has to be credited by 1 lakh rupees. Wait. So credit side, in loan account, credit side 1 lakh rupees, you write in the amount column first. Now tell me, here a lot of people have confusion what to write. Don't write loan by Amit account income. Here by loan by Amit account will not make sense, because in Amit's loan account, if you write loan by Amit, what information are you getting? So always you will write the name of the opposite party, that is bank. Credit ka opposite party is who? Debit. So what is the opposite party name here? Bank. So by bank 1 lakh rupees. So amount 1 lakh is in credit. So that only will record in the credit side of the ledger. But name will be opposite party always. No, you not, you know, only capital account that I'll be discussing in the upcoming class, you can combine multiple columns. Whereas as long as loan account is concerned, if 2 loan account is asked, you will create 2 separate ledger only. Now, so I've recorded this, guys. By bank 1 lakh rupees is captured. By bank 1 lakh rupees is captured. Now my second journal entry, is it affecting my loan by Amit account? Yes. Here also loan by Amit account is credited by 4,500. So in the credit side of the Amit account, record 4,500. And who's the opposite party here? Interest on loan is the opposite party. Yes. So by interest on loan by partner will be the party name. Now, is third entry impacting my loan account? No. With this, we'll stop. So now what will we do? We'll try to do the balancing. And here you'll have a balance. Why? Because this is not a nominal account. Loan by Amit account is not a nominal account. It is a balance sheet item. And more specifically, it is a liability. So liability will have what balance? Credit balance. So what is meant by credit balance? I'll explain. If you total, guys, the total side of credit is 1,04,500. In debit side, there is nothing. Accounting rule says that every transaction should have twofold impact, one in debit, another in credit. So to have a balanced account, the total of both sides should match. Now the account is like this. So it has to be artificially balanced. So we are artificially putting this 1,04,500 by putting this artificial account called as balance carried down. So to balance carried down is 1,04,500. We're trying to artificially balance the ledger so that it becomes equal. Now, this balance carried on is coming on debit side. Balance carried on where it is coming, that will not decide what is the nature of balance. Brought down balance where it is coming, that will determine what is the nature. So by balance brought down is coming 1,04,500 on credit side. Therefore, it is a credit balance item. Therefore, it is a credit balance item. So if the balance brought down comes on credit side, it is a credit balance. It will go to liability side. The balance brought down comes on the asset side, it becomes a debit balance, which will go to asset side in balance sheet. I'm repeating one more time. The balance brought down of the ledger is coming in the credit side. It becomes a credit balance. So where will this go to balance sheet? Liability side. In the ledger, if you get a balance brought on debit side here, so this total will go to where in balance sheet? Asset side. So that is why they said that asset is having a debit balance item. So all the ledger which is having debit balance will go to asset side. And all the ledger which is having credit balance will go to liability side. Online people, am I loud and clear or not?
Yes, sir.
Yes, sir.
I'll give you 1 minute of time to finish loan by Chaman. Very quickly. Loan by Chaman. Very quickly, loan by Chaman. Danish, fatapat finish. I'll tell you, there's a twist there, but I'll not tell now. I'll tell it later. मिलेगा बट उसको तो यूटिलाइज नहीं कर पाए. बताऊंगा उसमें क्या मिला है. What question you want to say? Yeah. Question tag like you have the journal entry with you. Acha, you want to ask question? Okay.
Completed, sir.
तू कहाँ पढ़ी? पिछले साल किसके पास पढ़ी है? नहीं, you tell me. पिछले साल किसके साथ पढ़ी है?
The dumbest thing you can I write A/C instead of account?
A bar C, this short form is allowed. Where top? Account AC only, no. This account can be A bar C, yes. Why do you have this doubt telling that this is dumbest? If it is doubt, let it be doubt, no. Why do you want to attach a prefix silly and doubt in that? I don't understand. Done? Perfect. Online people, any doubts? Adi, Akshat, Ananya, Lakshana, Driza, Gunapati, any doubts?
No, sir.
Hari, Idika, Janani, Sarthi, Nishka, Ritik, Samrita.
No, sir.
No, sir.
Fantastic. Fifth question.
So 1 minute.
Okay. Huh? Third question I'll keep pending. We'll do fifth and then go back to third. We'll finish, don't worry. Without finishing that, we're not going home.
Only till 8:40.
I have to finish 5 and 3, then you're going home. Illustration 5. Shh. Illustration 5. Homework 9. We'll do in class. Why I tell you? I'll tell you why. There's a twist in this question. Online people, can I move to illustration 5?
Yes, sir.
Now, listen to me very carefully. Offline people, concentrate. Fast. Can we do? It will be very quick. Next, Vijay, Ajay, Suresh are partners sharing profits equally. Okay. Vijay had given loan to firm. So it is loan by Vijay, loan by partner. On 1st September 22 for 2 lakh rupees. 1st September it is given again in the middle of the year. So proportionately you have to calculate the interest. It was agreed that the interest will be paid 12% per annum. So 12% into 6 by 12. Very important. Now this is not the twist here. The twist is that interest was paid by check up to Feb 2023. Interest was paid. And on 1st March 23, and balance was paid on 5th April. That is, interest was paid by check up to February. So till February, whatever is the interest due, that was paid on 1st March. And March month, whatever the pending amount is there, it is still pending. Now please understand this point. Understand this very clearly. This is the financial year. The loan is given on 1st of September. So interest will be calculated for 6 months. This is for due, the amount that is due. For this is for interest expense. Okay. So interest expense for 6 months. Payment, there is a twist. They're telling that from September till February, whatever the interest was due, this is paid on 1st of March. And for March last month, whatever the amount is pending, that is due. This is due. So this is paid next financial year. I don't have to worry about the next financial year because I'm going to record the entry for current financial year only. So my question is that for the amount that is being paid, what will you do? I'll give you two options. Sir, one, I'll pass the due entry for September, October, November, December, Jan, Feb. 6 months I'll pass a due entry. And then I'll pass a same payment entry for that. Or else you combine these both entry and pass a common entry. That is, you will not pass a due entry, directly interest expense to bank. Both are allowed. That is, you pass a due entry, that is interest expenditure, to liability, that is loan by whatever the name is. What is the name? Vijay. So interest to loan by Vijay, you can pass a due entry. Then to the extent you paid, you reverse the liability. So liability reversal to cash and bank. This is one option. But in your textbook, they have not done this option. What they've done is they've combined these both entry. Combining entry means what? This and this is knocked off. What am I left with? Interest to cash and bank. So from September till February, whatever the interest component is there, that you will pass a combined entry called as interest to cash and bank. And for this last month and all, you'll pass a due entry. I'm repeating one more time. Listen to me very carefully.
Both are allowed.
Both are allowed. But in a textbook, they have followed this method. So that we'll stick on to that. No, that's what I'm telling. So September till February, what? How many months? September? No, this is October or September? September, no? So September, October, November, December, Jan, Feb. So 6 months ka interest is paid. And 1 month ka interest is due. Now, normally I'm telling you there are two options for this. What do you mean by that? Sir, first I'll pass the interest entry separately for 6 months. What is the entry? Interest on Vijay's loan to loan by Vijay. What is the interest? Sir, Vijay is given a loan of 2 lakh rupees. 2 lakh into 12 by 100 into 6 by 12. Because I'm calculating for September to Feb only. How much? 12,000. 12,000. Now, for the amount of March, for this I'll pass entry called as interest on Vijay's loan to loan by Vijay. This will be 2 lakh into 12 by 100 into 1 by 12. Because this is from September to Feb. And this is for March. How much? 2,000, 2,000. So for both I pass the due entry. Any problem here? Online people, any problem here?
No, sir.
Then for this, what they're telling that this 12,000 is being paid. So what is the payment entry? Loan by Vijay to bank or cash 12,000, 12,000. Okay. Then what will be my next entry? This interest is my expenditure. I need to close it by transferring to P&L account. So I'll pass. So this is one entry. This is second entry. This is third entry. The fourth entry will be what? I'm transferring this to P&L. So P&L account debit to
loan by Vijay.
Loan 14,000, 14,000. With this I can stop. But in a textbook, what they have done is instead of doing two separate entries, they're telling that if payment is made, why to create a due entry? Like that, they have assumed it and they are passing a combined entry. So the one entry and second entry, they're combining together. So when I combine these both, what will happen? 2 LVB and by LVB will get knocked off because same value, same account got knocked off. So what will be the remaining ledger? Interest on loan to bank 12,000, 12,000. So this is the first entry, which is nothing but interest on loan by partner to bank account, which means that first entry and the second entry, that is due entry and payment entry, is combined. So it becomes this. Online people, any problem here?
No, sir.
So can you explain the two separate entries which are combined in the textbook again once?
Combining, I'll do it. Yes.
Not the combining on the individual ones.
Sorry?
The individual entries, I didn't understand how you got them.
This one.
The first two.
Okay.
Why are you crediting loan by partner when you are receiving the payment on time in the
Okay,
first
I'll
place?
tell you why. Yes, ma'am.
There's nothing wrong.
Nothing wrong, but we'll follow what textbook is doing. No?
Okay, but you know,
Yeah, both are correct. Okay, who asked online? Nishka?
Yes, sir.
Okay, Nishka is asking, sir, when the payment is made promptly on time, why are you passing a due entry? See, normally what happens is, forget this concept. The next set of classes that we take, once the partner's capital account, everything will come. No, there is a norm that will agree that even though any amount is paid to the partner, you will always pass a due entry. Due entry recording will give you a clarity that how much money is totally due. Now, for example, if you pass interest on loan to bank, no, directly. So how during the year, what is the liability that is accumulated for towards that interest? That accumulation point will not get to know if at all your boss wants that information. You're getting my point? So here in this interest concept, that is the next three concepts that I'm going to discuss: interest on loan by partner, interest on loan to partner, and for rent. For these three cases, they have done an exceptional thing saying that if a payment is made, you don't pass entry of due. Directly make the payment entry. That is expense to payment. That is, you combine these both entries and make the payment. Whereas after these three concepts will cross, when you come across the next set of concept, there if any payment is made to the partner, even if payment is made to the partner, you have to pass a due entry. There's a compulsion. So there you will get confused. So I'm giving you clarity here now itself that both are right, but we'll stick on to what the textbook is saying. So now the reason why Nishka we are passing to loan by loan by Vijay account is basically to get that liability of interest accumulated in the ledger, so that when you take a ledger, you'll get to know that okay, this is the amount towards a principal, this is the amount towards interest. You'll get the total liability part. You get my point?
Okay, so
simple. देख मेरे को हिसाब किताब चाहिए भाई, तेरे को पैसे कितना मेरे को देना, how much is the total money that I owe you?
सर लेकिन आपका जो इंटरेस्ट है वो एंड के ईयर पे ड्यू होता है, राइट? at the end of the year. So
Correct.
when you already received the amount on March 1st, why are you?
Due entry doesn't mean that you will pass only at the end of the year. So wherever the payment transaction is triggering, just before that you pass a due entry and then make the payment entry. Your point is right. So what you are saying, only this textbook is done. So here,
Okay.
what you're saying is right. But what I'm telling you, there is a concept where even otherwise, let's suppose you're dealing with interest on capital or interest on drawing. If any interest on capital drawing is paid in the middle of the year, still you'll pass a due entry and then we'll make the payment in future. The concept is what we're going to discuss. So that time when I, if I had told you very clearly that wherever the payment is happening in the middle of the year, just pass the payment entry directly, you would have got confused this in the future transaction. That's why I'm specifically pinpointing and saying that both the ways are correct. But why are we following textbook method is because here on 1st of March, the payment has happened. Normally the due entry happens at the year end. But generally, when the payment is happening in middle, the due entry is recorded along with the payment entry. So first you record on 1st March the due entry, followed the payment entry.
And then you cancel them both out.
But here what your textbook has done is that why do you need to unnecessarily complicate the accounts? So instead of that, what they did, the due entry, payment entry, they combined it. So this
I can do that now then. Directly the payment entry.
Yeah, that's what I said. 1 and 2 you can combine into, nothing wrong.
Okay.
Because for these three concepts, combined entry is allowed by your textbook.
Okay, sir.
Got it point. So this entry is coming as a combination of due entry plus payment entry. So this entry we have captured interest on loan by partner to bank. So this is nothing but expense account debit to bank, expense to asset. This is nothing but September to February ka interest wala part. Then next entry is what we captured. See, this we captured first. Then we captured interest on Vijay's loan to loan by Vijay. That due entry for 1 month. This is that for 1 month. So this is 6 months ka due plus payment. This is 1 month ka only due because payment is not due. Now this is over. Now combine both the expense entry and transfer to P&L. So what is my transfer entry? 12,000 debit, 2,000 debit, put together 14,000 debit. To cancel the debit, I have to put that 14,000 in credit and transfer to P&L account. So what you will remember is as long as loan by partner, loan to partner and rent, paid to the partner, these three concepts are concerned. Wherever the payment is happening in the middle of the year, you will pass the due entry, payment entry combined like the first entry. Am I clear? Wherever they say that payment is not done, then you will pass only the due entry. Am I clear, everybody, online people? Hello?
Yes,
sir. Yes, sir.
Okay. Now we're left with only one question. Now, since we're running out of time, this illustration 3 alone, I'll do it in the next class. Yes. तो भी combined. Yes. Any end के पहले अगर कुछ भी हो तो combined. So now today is what? Friday, no? So meeting on Sunday. So Sunday, Mehak and Bhavesh, you have that coaching class. So for you it is not there. So what time you can make up? तो कितनी बजे तक आ सकता है? ठीक है. So what we'll do is we'll meet 11:45 sharp. 11:45 dot I'll start for initial 5, 10, 15, 20 minutes, 15 minutes, not more than that. We'll do a quick recap. And 12 p.m. sharp will start with the next concept. And the classes will be for 2.5 hours. So Sunday alone, now why 2.5 hours is because we have missed few hours this week. No, so to compensate that, I need that extra hours. Don't worry, I'll give you 2 breaks of 3 minutes each. Okay. Okay, wait. Whiteboard. 1 second. Guys, please stay on. Don't go anywhere. Attendance is being taken. Don't go out anywhere. You can take a pic of this. ऊपर लेके भेजूंगा. कौन सा फोन से? ये एक सेकंड. है. ऑनलाइन तो छोड़ दे, ऑफलाइन कर दे. Okay, once again, let me wrap up the session so that online people can push off. Offline people, please wait. So yes, people, that's all from end for today's session. I'll see you all in the next class, which is on Sunday, 11:45 a.m. sharp, and that session will be for 2.5 hours. So please be on time. Until then, bye-bye. See you. Take care.
Thank you,
Thank you,
sir.
sir.